Good morning. No, it's not. It's afternoon. Well, I suppose it depends where you're listening. Morning, afternoon, evening, everyone. It's me, Ryan, with the Friday fix with the awesome AlphaPicks guys. As everyone knows, this is the very concise 15 minutes ish review or roundup of the week that's been. Obviously, hence why we do it on a Friday. There's one of them. Hang on, invite co host. One sec, Jay, one sec. Um, I'll wait for him to. Actually, I'll tell you what, I'm going to try and get the legals out of the way. Nothing discussed on this basis session constitutes trade or investment advice or infers any kind of endorsement by PiQ Global Limited, Trainers PiQ or PiQ Suite, or its affiliates, including the hosts, which is obviously the amazing Alpha Picks guys. And there's the other one. There's Phil. One sec. Let me add you as co host. As some of you might be aware, this is an outdoor broadcast. I'm live from the American Bar at the Stafford Hotel, as usual on a Friday. Although saying that, I've not been here for a couple of weeks, and there were concerns that I might have died apparently when I turned up earlier on.
You definitely
But how
broke the
are we?
trend, Ryan.
Pardon?
You definitely broke the trend.
Well, I did. Again, tell me if it's getting a bit noisy in the background because there is some work going on in St James's. So I will try and mute myself when I'm not talking. But anyway, guys, how are we? All good?
Good, thank you.
All good. It's good to have you back on fine form, Ryan. I saw a very motivational tweet from you earlier this morning as well. Expletive ridden, but just really looks like you're enjoying your Friday, which makes me happy.
Well, I'll be honest. I was feeling much better, and then I think a couple of beers during the week when was still recovering have kind of done me a kipper. So I'm currently sat here with my hot toddy. I'm kind of saying that that's medicinal.
Yeah.
And my cigar. I know Bearded Miguel would be a fan of that. Hello to you, sir. But yeah, we'll see what happens. I'm meeting young Zach Eisman, ex New Squawk, obviously does the overnight roundup for us at PIQ. Meeting him in a bit. He might actually turn up whilst we're recording. And then afterwards, I'm going to go see Brown Shoes himself and Ryan from Forex Flow Live. So it's I could be feeling it tomorrow. Let's put it that way.
Yeah, fine. Well, let's get the bits and bobs done then. Whilst we're all in, I think Jay's off the booze as well. So I think whilst we're all in a soberish frame of mind, lots of interesting bits and pieces actually this week. I wanted to actually kick off with a note I read on Monday from our old friends in the equity strategy team at Goldman Sachs, and they were saying, and their thoughts are, that over the next decade, they see annualized returns of 3% for the S&P 500, which contrasts to the past decade, where we've had average returns of 13% per annum. And why this was interesting was because obviously 3% per annum for the next decade isn't particularly exciting if you're an equity investor. And they point to a few different bits and pieces. They thought about how essentially earnings per share growth, they see that decelerating. They see that the leaders, the largest top 10 companies in there, they see underperformance from them. They think that's going to drag it down, yada, yada, yada. Now, why I wanted to bring this up to begin with is that thought where equity markets, as a general principle, more often than not, do go up more than they go down. But the question is have we become accustomed to too high annualized returns, particularly over obviously since COVID? And in reality, if we are going to see 3% returns for the next decade, is the equity space still the place to be? Or is it a case that maybe we should be reducing exposure to equities and looking into, commodities, for example, alternatives or whatever, in order to try and build a better portfolio? So
I
that was what I
just
wanted to kick off with.
I
Let me know.
think I just bet more.
Just leverage.
that I'm joking. Anyone that's listening, please acknowledge that I am joking on that front. Yeah, no, I did read that note myself. It's an interesting one. Part of me is thinking, well, it's always good to kind of tame the beast, so to speak, and kind of you don't want to be predicting 15% returns and you only get 5%, but 5%, 3%, they're still returns, right? But again, I'm against kind of predicting too much into the future. Oh, sorry, it's getting very loud here. But yeah, I think it's hard enough to call the next 3 months' performance, let alone anything else. But yeah, we just don't know what's going on.
Yeah, I think it's an interesting one, especially when the thing is even looking out to sort of middle of 25, is that when we look at pricing for the Fed is that, the base rate in the States should be 3.5%, if not higher. So I suppose it's one of those where if you can be picking up risk-free of 3.5, and who knows where rates go beyond next year or even after that. But I think it'll be very interesting to see, do you want to be taking on equity risk if you can be picking up a risk-free rate that's relatively comparable? So yeah, interesting note that I thought definitely. I think
I'd
there'll
tell
be a
you
lot
what,
more stuff.
is kind of as a side note, if they are correct, and nothing is for certain. Absolutely nothing is for certain, especially not trying to predict equity returns over the space of the next 5 years or whatever, the next decade. But if they are correct, it means that it gives a lot of funds and whatever, and real money accounts that kind of benchmark themselves, their performance to the S&P 500. It gives them a fighting chance, at least, I guess, to beat the
Yeah,
benchmark for once.
yeah,
It's the benchmark for a reason. It's incredibly hard to beat. It's why I always say to people, especially if you're new to investing or whatever, or you just want to trade on, just so you can say you've got something on. It's hard to go wrong just putting it into a S&P tracker, right? But maybe
yeah.
that is about to change.
Yeah, agreed. And especially if you obviously if we do see the Fed easing, into the bulk of next year, and we do see rates coming off significantly, a lot of obviously the capital from those money market funds, etc., which we've spoken about before, where does that go? Yes, you think some of it naturally goes into equities, but if some people have the view that actually that's not where returns are going to be going forward, then obviously you look at, dare we say it, crypto, or alternatives, commodities as areas that could really shine. So yeah, interesting one on that front to kick off the week. And then Tuesday, Jay, do you know if you wanted to run through? Obviously Tuesday and then onwards was basically 2 weeks to go to the US election. We dropped. Yeah, go on, Ryan. Oh, it's Jay, it's you.
Yeah. Well, 2 weeks to the election, which maybe we'll chat through a little bit later on. But Tuesday, some of the standouts were from some of the corporate earnings. Starbucks pulling guidance for 2025 after sales plunged for a third consecutive quarter. And then McDonald's had not the headline they wanted to see, but the E. coli outbreak in the US, which really took the stock plunging lower following that news. So that was an interesting Tuesday on the news front in equities.
Yeah, I saw somewhere that they said put it down to like I read somewhere that said it was because of the quarter pounders that the outbreak was. Then I read somewhere else that it was something to do with like the way they were slicing the onions, and I was like, I don't think that could be legitimate. But I mean, whatever the reason is, I mean, it's definitely not a headline you want coming out, is it?
No.
Well, I think the timing was great, right? Because it was like 2 days after Trump giving out
Yeah,
prizes.
it was.
It's like this. It just didn't seem like it all added up. It's like something's not right here.
I mean, it's a more unusual
Let's-
hit, isn't it, than the traditional way to try and take out Trump's reputation by going after him via McDonald's. But yeah, I mean,
Well, I was going to say, and you say hit. Maybe this is it. Maybe this is the Iranians getting involved.
yeah. But no, I thought those were interesting. And then election. So we put a piece out on Wednesday about this, and Ryan, interested to get your thoughts on it too. Even though as we with our disclaimers, politically neutral. We're not advocating for one party over the other. But in terms of sort of looking to have positions on, or if people do have the view on that, is that there are some areas where we do feel will naturally benefit either a Trump or a Harris victory. Obviously, the particular one for Trump, from our perspective, is we do think the US dollar will be a net benefactor, and quite a nice way to play that we think is being long the dollar against an EM basket of countries that he'll probably go after with tariffs and foreign policy. So
So again, personally, my view is, if you don't have to trade, don't trade, and I don't have to trade, therefore I won't be trading. But one thing I did flag, it might have been Bank of America or someone in a note this week, highlighted, no shock that the vol around the election for the Mexican peso is elevated even more than you would expect. or even more than they were expecting. So when it's quite interesting that you mentioned about, what would you trade the dollar against? I think the obvious trade would be, dollar peso, because we know, saying one thing in, when you're on the road campaigning is another thing to actually what you do in office. But he has been extremely vocal about tariffs on Mexican cars and farm machinery and stuff. Like we're hearing like numbers like 200%. Now, yes, there's a lot of, maybe he's saying that so that if he does get into power, which, is looking more and more likely in terms of the betting markets and whatever, if he does get into power, maybe he's just going to hold that 200 number over the Mexican government, in kind of for a bargaining play, regarding migrants crossing the border. It might be a case of like, I will do 200% because I've said I'll do 200% unless you fix the border situation. It's so many. We are trying to play 8D chess in like with one D's worth of information. It's a difficult one, but I think if my background, like when I traded Brexit on the market. Sorry for the background noise. When I traded by Brexit on the markets. One thing I learned very quickly, and also I've traded multiple elections, including the initial one when Trump came in, was it's very easy for especially a new trader to be hit with the old paralysis by analysis. There is so much going on. There's so many feeds. There's going to be so many states in play. If you are going to trade, my advice would be really kind of drill down and find 2 or 3 key binary outcomes that you're willing to gamble on. And then just sit on your hands because, election night, for those that haven't traded an election night, you've got a million different live counters that are available online. You've got a million different news organizations pumping like their narrative, trying, as the night's coming in, because it is like the Super Bowl for the US, right? For instance, when I was talking to Blonde Money, we had our political update weekly show on Thursday, yesterday. And she mentioned about Wisconsin, and basically if Trump wins Wisconsin, that could be the ball game. So if you were looking just for a sit on your hands, you might miss a bit of movement and stuff, but at least you'll be more confident when you do trade. That would be my state to focus on. And again, to kind of draw parallels to kind of previous experience and stuff. Brexit, I did about 2 weeks worth of work working out exactly what I'd trade on each kind of outcome as the cities came in. Come to the night, it was so choppy, it was untradeable. So I went back to my original idea, which was, look, I'm going to just go all in basically on whatever the Sunderland result is, because it was known that obviously Sunderland was a key Labour city or area constituency. Sunderland were also mooted to be a Remain constituency, and they were also one of the earliest ones to report. So for me, if they went Brexit, it was going to be Brexit. And thankfully it paid off. But I think, I'm not saying that it's going to 100% pay off for anyone that kind of follows that ethos, but it makes trading so much more easier. And, it tests your discipline, but, as we all know, trading is 90%, well, 99% discipline. So honestly, I'm not going to say what I would trade on the event, but what I would say is how to trade it would be really kind of focus on what your outcomes are, or what few kind of results you are going to focus on, because I promise you, if you try and look at everything, you will miss everything and trade wrong, and you'll be stopped out halfway through the night. You'll do your account halfway through the night, and you'll miss the easy wins.
Yeah, all very valid points. The only thing I'd chip in on that as well is also it sounds a bit bizarre, but also just in terms of trying to give yourself breaks through the night, because being staring at your screens, especially if you've done the day and then you're tired and then you're going in. Often that obviously certainly for me, can impact your mental capacity. So I think it's a great point of having your game plan before you go in and having your
No, sod that. Like, you got to have a bucket under your desk. Got to be shitting and pissing in the bucket, mate. You ain't leaving your desk.
And the caffeine, the magnesium pills, that's the other one. Anyway, hey, and a little tangent as well. We saw obviously news broke. I wasn't actually going to mention it, but now it's here and there, about how it was actually on Polymarket. You came with the true odds. It was actually that French dude, wasn't it? Bet about 28 million across a few different accounts. So
apparently just a little punt.
Yeah. Well, I mean, also, I don't know. I mean, so much for Polymarket's like privacy policy, data protection, right? I mean, this guy, this poor dude. I mean, obviously, I haven't given his name out, but I think they've done him. They've listed him.
That was very odd. It's like, like your privacy. Actually, I think it was Conks, our mutual friend Conks said, it's like, your data is important to us until it's not.
Yeah. I've got it here. Yeah, so his accounts: Theo4, Princess Caro, Mitchie, and Freddy 9999. Those were his accounts. So yeah, out in the open. Swiftly moving on. Jay, what about Wednesday, Thursday? Anything caught your eye?
Yeah, so well, Wednesday night we had the Tesla earnings, which had a good move up in after hours trading, but Thursday really continued the rally, ended the day up 22%, which is the biggest day since I think it was May 2013, maybe, if I can remember that off the top of my head.
Oh, that's attack already.
Yeah. So Musk forecasts as much as 30% growth in vehicle sales next year. Which is, I think, is interesting because the narrative of electric vehicles over the past few months has been they're maybe not going to take off as much as initially thought. The whole net zero green ideas are continually being pushed back, and even looking at secondhand car markets, electric vehicles are really falling much faster than anything else. So it's a very contrasting narrative that Tesla are now coming out predicting or forecasting 30% more growth following
Yeah,
4
but
quarters
hang
of.
on. Let's be really clear here.
Yeah.
Musk forecasting and Musk delivering
Yes.
are two completely separate
So
things,
this
right?
is.
Look, let's be honest. This is this is a guy that we're going to have flying cars 6 months ago,
Yeah.
right?
So
All this guy.
this is
So look,
another point
this is
that
go on.
like a CEO can say whatever they want on an earnings call. They're not going to be restricted, but it could be damaging to the stock. But the fact that the stock's up 22%, do we think that it is? I mean, I think I've given up hope of trusting anything that Musk says when it comes to timelines and forecasts. But are investors believing Musk with the stock up 22%? Is it that it's a heavily
I think
shorted company? Is it like there's also
I think
interest?
because my view on this, and I'm probably wrong, I usually am. My view on this is Tesla is like its own animal. You can't apply logic to Tesla, right? There's too much of the cult involvement in
Yeah.
it. And then change on day begets change on day, right? Flow begets flow. Um, it's I don't believe any forecasts that come out because I don't believe they know what's going to happen, and regardless of that, we know they're always going to be punching on the numbers, punching up. Bit like me when I'm trying to pull a bird, always punching up. Forever alone, still single. If anyone's out there, but yeah, it's like, but yeah, does because it's up 20% on the day. Sorry, that laugh in the background was Zach, who's just joined me. Thanks, Zach. But yeah, does that mean that investors actually believe him? I don't believe for 1 second that investors are like 100% in belief of what's being said, but the cult will believe it,
Yeah.
and the cult, as we know, is is a significant amount of flow. Like, anecdotal, right? So before COVID, before lockdown, before when everyone became a day trader, you like to your CME and all stuff like that. Actively kind of avoided retail flow, actively avoided retail offerings, right? Because they were like, you know what, we don't need to rely on retail. Yes, there's a lot of them, but they're tiny. The COVID, the lockdown, all the day traders, the rise of Wall Street Bets, rise of Robinhood proved to the likes of CME that you do need to get involved. And I've had first-hand experience. I've had meetings with CME. I know that CME are very much moving into retail. And it's because the likes of the cults of certain stocks. So how much was that 20% move indicative of real money investors believing the rhetoric or believing the language versus how much was cult investors providing flow, which triggers more flow?
Yeah.
I would, if gun to my head, I would say it was a lot more of the latter.
Yeah, I think it will be an interesting one to see how it plays out over the next week or so. I mean, the election narrative will have a part in equity generally, which could skew the story there. But be interesting to see maybe over the next quarter how Tesla reacts. Was it last week that we or the week before we were saying about is Tesla going to be higher or lower in 12 months? We had that little game, which I can't remember which one of us said it was going to be higher, but 22% up a few weeks later is nice and
Yeah.
put you in favour there.
Not financial advice, NFA. Yeah, the only thing I actually
It's like, let's be honest,
yeah.
we are starting on the back foot, so let's be honest. But we did say it would underperform the S&P
Yes.
over the course of 12 months.
Yeah.
which we're right. So we're right on one and wrong on the other 2 weeks in. But I mean, look, it's early days, isn't it? We're long-term investors here. The only thing I want to chip in was that I was actually, for all this like bluster of autonomous vehicles, the features, autonomy, etc. I actually thought from what I saw of it that the details of the cybercab and the robovan was very sparse. It had some like glossy pictures, but there were a
I
lot
think
of
you're being very kind there,
unanswered
Phil. I think you're being very kind.
Yeah,
Not only did we have the sparseness on that, but we had the robots that were remote controlled.
mm,
They weren't robots. They were like, it's basically they were like dressing people like me up in suits almost.
No, but not just on the
As
event,
wait for the elf joke.
on the financials, even this week as well.
Oh, sorry. Yes,
And
yeah.
in terms of much chatter about it, like, the actual details on production levels. I mean, I think the only specific he said was they were going to look to get up to, I think it was 2 million eventually in production on an annual basis. But I mean, I think until they can provide some more tangible details on, timescales, actual production capacity, XYZ on particularly the cybercab and the robovan, and obviously costings. I can't really get too excited behind all this autonomy if it's still in Musk's dreams, as it were. But that's my take on the Tesla one. Jay, anything else?
I think that's all from the news front. There's a few maybe stats that we could pull out. Which ones have I noted down?
Yeah, Jay, you've taken over the mantle.
Yeah,
I haven't
take
got
over
any
start
good
my part.
stats this week. I haven't got any good stats. So yeah, hit us with whatever you got.
So the Monday, Tuesday, and it extended into Wednesday was the first back-to-back losses in 30 sessions for the S&P. And what's the end of this?
Would you reckon to that? Right, I'd say that's like a 5 out of 10.
The best, best streak since 1928.
The what? Sorry.
Best streak since 1928 of a 30-day, no back-to-back losses.
Okay. Yeah, that's a good stat.
Maybe makes it a 6 out of
10. I do like that stat.
Yeah.
So the stat attack crown could be passing
That's
on.
a 7.5.
7.5.
The other one, not the previous results forecast anything, but in the prior 13 instances when the S&P closed above its 200-day average for at least 242 consecutive days, with the index less than 3% below a record, it posted a median gain of 7.2% in the next 6 months. Maybe it's a slightly more technical one.
That's a bit more technical to get our heads around, to be honest, Jay. Say that one again.
So 242 days consecutively.
Yeah. So, do you know what? I'm falling asleep.
I mean,
this is a 2.3 stat. This is awful.
Okay, we'll leave it the first one.
Tweet.
It's Friday, mate. It's Friday. Keep them easy.
Yeah,
Jesus.
I think I need to see that one in writing, to be honest.
It was a tweet.
I need crayons. Explain it to me with crayons.
Fine. Ryan, any last bits from you? Anything we missed?
No, not at all. No, I don't think so. Anyway,
apart from,
oh no, I tell you what. Go on. Just quickly for me, one thing I will say, because I have flagged it in a couple of blasts this week and the political blast that we did. Obviously, we all know about Christmas markets, about people going away. Sometimes there's an argument that large desks and whatever, pretty much Thanksgiving that's them done. I believe my bet is that pretty much the week leading into the election, no one's going to be putting on fresh, new, massive positions ahead of that. Then we've got the Fed. Then we've got Thanksgiving. I would not be surprised at all if basically a lot of real money accounts, a lot of big desks are banking their year a week before the election, and stick the intern on the desk, go and enjoy a very long break, or if you are at the desk, stick your feet up, reading the Daily Mail sidebar of shame every day, and then come back in the new year. So my prediction is that we will see Christmas markets. Anyone who's been around for long enough knows what I mean by Christmas markets, but Christmas market liquidity and stuff like that, I believe we'll see that a lot earlier this year, as in next week, and I'll be shocked if we have big players entering the markets. What this does mean, though, is like Michael Brown's Barnet, conditions going to be thin and wispy. So yeah, it's one. I think we could be in for some volatility, but volatility on low volume. So obviously that's one where that, to me that normally just says chop, which for me, stay out of it.
And what do you think on non-farms? Obviously, this time next week, do you reckon people will be?
I couldn't think of a worse thing to trade, to be honest, at the best of times.
Yeah. So
gone are the days when no matter what the number was, the Bund would go up 30. It's like up 200 ticks, down 200 ticks, down another 200 ticks, up another 200 ticks. Then Eurex would crash. That's back in the day. But I couldn't think of anything worse than trading on farms at the moment, especially because we got the hurricane impacts as well. It's just too noisy.
Yeah. So essentially, you actually think books will be closed, i.e., pre next Friday, essentially.
Yeah. When I say books, obviously for those that aren't fully aware of what I mean like real money book. I mean like real positioning, real flows coming in. I'd be shocked if we see much of that after the election. A week before the election. But I'm usually wrong, so take that with a pinch of salt.
No, makes sense. Wonderful. Well, yeah, that's it from me as well. Kept it concise, I like to think.
Awesome.
And
we say 15 minutes ish, but the thing is we had lots to talk about, right? So happy day. Also, it's my first outside broadcast in a little while, so give me a break.
You got your pajamas on. You put some trousers on.
Well, not quite. I had to dress up because
what you can't see, he's got a cigar and a cocktail on the go over there.
I don't know what Zach's on about.
It's really something.
I don't know what Zach's on about. He's been sacked in the morning. But anyway, guys, thank you so much as always. Listeners, thank you for tuning in. As always, from me and the AlphaPicks guys, if you are trading, keep it tight. Don't do your balls. And we will tune in. We'll catch you next week for another Friday Fix.
Pleasure. Thanks, guys.
Thanks, guys.
Cheers, guys. Bye-bye.
Lovely.